FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, I'm going to answer a question that I got from one of you about directional bias. So when we talk about directional bias, obviously having a directional bias is important because it's going to help you try to see or identify the different types of setups that you're looking for. Now, if you trade how we trade here in this channel, if you're new to the channel, there's a playlist called Trading with Market Makers in our playlist. Go ahead and check that out. It'll explain the entire strategy so that way you're not feeling lost. But anyway, so for directional bias, if you have a directional bias, obviously it's going to help you develop your trading strategy for that day, and every day you should have an actual trading plan for that specific day, depending on what you're looking at as far as structure and things of that nature on the chart. So let's go ahead and break this down for you. There's several different ways that we can look at getting a sense of directional bias. I'm going to show you how I like to view directional bias. This is not the only way to view it. This is just the way that I do it. All right. So let's take a look at Euro JPY. And so what we're going to do is we're going to go ahead and first we're going to shrink the chart so we don't know what essentially price looks like, right? And then let's go ahead and go back to a random date here. So I don't know, let's go back to May 3rd. And we'll go to that date here. All right, so we'll click on the replay feature here so we can start. I believe the week starts here. Yeah. And then we'll open up the charts here so we can actually see price, and we'll talk about the movement of price as it goes through and how I like to do it. All right. So here we have the end of the week. And starting of a new week here. All right. So this is Sunday, Monday starting out. There's, obviously the beginning of the week, there's really not much that you have to go off of, obviously, because of that. So if you just look at the previous weeks of Euro JPY, what has it been doing? You can see basically it's been moving in a downtrend, right, for the most part, since March 26 or so. It moved from a downtrend, it had a retracement, another downtrend. It looks like you just had another retracement here this past week here previously. All right, so let's go ahead and let's start to play this out on Monday. So that way you can get a sense of what I'm looking for. And so for me, what I like to do is I don't like to trade on Sunday, Monday, because I actually want to see and get some type of a structure or some type of beginning, essentially, that could give me particular clues to what the rest of the week might look like for me. All right. So typically Monday, I let this play out, so then I could essentially get some form of direction for like Tuesday. So we'll go to Tuesday's Asian session here, and we'll just stop it right there. So what do we know so far, when we're looking at the structure here, as far as what directional bias should we have, let's say on this Tuesday coming up for London session, right? So immediately for me, what I see is I see this right here, this structure here, and then this structure that was created basically on Sunday, Monday. All right. Now you can look at this as, let's say, a peak formation high here. Okay. And then you could look at this as level one. That's one way you can look at it. Another way that you can look at it is you can simply look at the EMAs as well, and you could see basically that all of the EMAs, so the 200 here, the 50, and the 800 are all above price. So essentially, what does that tell you? it should tell you that on the higher time frame, so the 1 hour and on the 4 hour time frame, that price is still trading below the 50. So what does that mean? It just means that basically price is still trending down, right? So your bias ideally should be to look for sell setups, because of the higher time frames are still trading below the 50 EMA. So that should be a simple bias that you can use. So for me, if I'm looking at this on a Tuesday approaching the London session, basically what I'm particularly looking for is, because of where the 50 is here on the 15-minute chart, I would like to get some kind of a bounce off of that 50. All right, you have the bigger time frames here above you as well. So the likelihood of this price action going down or selling is extremely high compared to it potentially going up. Okay, especially when you have this big structure here that looks like it's a peak formation high. All right, so what I would ideally like to look for on this is to get some sort of a trade setup, and based on where price is right now, maybe a type 2 at the high of the Asian range, where it's basically bouncing off the 50. You could get a type 1 here to go all the way back up to the 800 or the 200 or so. That's also another possibility. But when you have a setup with a pattern that bounces off the EMAs, like a 50 or 200 EMA or even an 800 EMA, those are very powerful setups. And those are setups that I particularly like to take because they have so many different types of confirmation on them. All right, so if we play this out here and see what we end up getting, there. So you have the first leg here comes all the way down and then comes right back up again. Now obviously this candle is way too big, right? This candle is really big. So obviously the stop loss here is going to be way too big as well, because you're looking at, you know, this about 22 pip candle or so. So the next candle, what you could do is you can use this candle here as essentially your entry, because of how price is behaving, where it's basically you have a first leg here and it wicked to the 800, and also it didn't make it to the 200, so it only wicked to basically the 800. So you have a second leg that's in the right session, which is the London box, obviously, and the timing is correct because you're in the London session. What other confirmations could you use? Well, you have a pinning to the second leg, pinning to the 800. You're coming off of potentially a peak formation high here, so you're not wanting to trade against that. Are there any other things that you can do to look for confirmations? Well, look at the TDI, and you have, I mean, you basically have a first leg here and a second leg forming here, right? So for me, I'm looking for a sell setup here at this particular candle. And so the way that that would look for me is something like this, where my stop loss is above the 800 MA. So if I'm wrong, I'm risking only 18 pips. Now the potential for me though is huge, because if we look to the left here to get where price structure is, which is somewhere in this particular range, let's say in this area here. So in this entire area, anywhere in this entire area here, basically I could, you know, use as take profits. Now the simple thing would be to go a 2-to-1 risk reward ratio, which is basically right here. So about 36 pips, you're risking 18 to get 36. And then after that, essentially you could start using some of these points, you know, let's say from the bottom here to this top here, which is essentially where I have my my stop loss at. All right. And if you get stopped out, by the way, you get stopped out. That's all that happens. So let's see what happens here. So you can see in one candle, basically, you're, boom, taken out of the trade, right? You go and you hit profit, and you can see 1, 2, 3 candles straight down. And let's see. So that was the London session right there, right? So we're going into, let's say, the US session. And so a lot of you might be thinking, okay, well, if you're starting the US session, you could be looking for basically a reversal, right? Because you would have the first leg here. You'd have this come down as the first leg. This goes up, and basically this would be your second leg here. Okay. Now, a thing about trading the reversal is that typically the reversal that happens in New York, if it does happen, it likes to basically go to the 50 EMA. All right. So you have to ask yourself, if I take this trade, it'd be basically risking 25 pips to get 28 pips to the 50 EMA. Okay, so that's a 1-to-1 risk-to-reward ratio, and that's not really a risk-to-reward ratio that I like or that I like to take. So in this case, I would actually skip that particular trade setup to the 50 because I'm just not willing to risk 25 to get 25. That's a 1-to-1. That's not something that's in my trading plan to risk. So I wouldn't risk it. So if we play this out here, it makes it to literally the 50. Now there is a setup here as well that you can catch as well, which is if you're not at the very bottom. So if you're not at the bottom here of the reversal, obviously the high of the day is here. This is potentially at this particular time the low of the day. So if you're not at the low of the day, you're not at the high of the day, you're kind of in the middle. Anytime that you're in the middle, essentially, I like to look for continuation trades during the New York session. So continuation trades would actually be very good trades, especially when they bounce off the 50. So this potentially here is another trade where you would basically have only a 15 pip stop loss. You have a railroad track here that you can use as your entry. And then if you come down for 2-to-1, you're basically almost tagging just the lows where price has already been before. And if this is a real actual like continuation trade, obviously it's going to go lower. It may go and touch this line here, which is the previous week's low. But the safety part of this is the fact that you're basically only trading it to get a 2-to-1 to the low, which is somewhere where it's already been to before. So this is another trade setup essentially that you could take, and you're going again with the direction of where price action is and where structure is going, right? So you can see that price goes right to the line of previous week's low, okay? And there you go. So we go to the next day. And so let's go to the London here. All right, so we're getting to the London session here, right? So what do we look for? Same thing, okay? You have the 800 and the 200 that is above you. So meaning on the 1 hour and on the 4 hour, the 50 EMA is still trading above price. So the trend is still down, right? So you're still looking basically for sells. All right, I'm still looking for sells. So if I'm looking at this, what would be the appropriate setup, the ideal setup that I would want to look for in order to get me into a sell setup? For me, again, it's a bounce off of the 50. So either bounce off the 50 where it's a type 2 trade, or you could get, by the time the London session opens, the 50 could be more towards the middle of the range, and it could basically help you get into a potentially like a type 3 setup or something like that. But price would need to come down first and then bounce off. So either a type 2 where price goes up and hits the top of the Asian range, right, and bounces off the 50, or price is going to come down and then bounce back up into the middle and then get rejected. and then go down again. Regardless, those are the ideal setups that I want. Whether they happen or not is something completely different. Okay, price could shoot up and make a type 1. But the ideal setup that I want is particularly a bounce off the 50. It's the setups that I like and that I look for all the time. All right, so let's see what happens. Okay, so if price does this, right, now you know, obviously a type 2 is highly unlikely because type 2s would have went right up to the top. This one went to the bottom. So now I'm thinking, okay, well, this is probably going to be a type 3 setup that bounces off the middle. So that's what I would be looking for. And there you go. There's your rejection candle right there. This one candle basically takes out a whole hour of trading. This would be your candle that you would look for entry. Now, if the candle's too big, which this candle's about 15 pips, so it's not too bad, right? So essentially the setup would be something like this. 2 to 1 would be somewhere down here. If you look to the left, is there any structure that you can use? Look, there's no structure at all. It's wide open. Do you see this? Look. There's no structure at all. None. What does that tell you? It's a pretty good ideal setup there. Now, in the best case scenario, you could see potentially, if you have a pullback at all, that'll happen. Now, pullbacks don't always happen, so it's kind of like a risk, almost a take. But you could wait for the next candle to open and see if it has just a tiny pullback. Any pullback at all, obviously, it's just going to save you maybe up to 5 to 10 pips, depending on how far back the pullback is. Sometimes a pullback doesn't happen, though, so you just got to be aware of that. So in this case, you did have a pullback. This pullback basically would have saved you about 5 pips or so. So instead of having, 17 pip risk, you would have about a 12 pip risk. So that's exactly what I'm talking about. All right. So let's see if this goes down or not. No, so there's your trade set up there. Now for the New York session, same thing. See, a lot of you would be looking for this reversal here. From here, first leg, second leg here. And I'm going to tell you the same thing, right? You're probably going to look for a trade back to the 50. So you have to think about, okay, if I'm risking 18 pips to get to the 50 from here is about 19 pips. So again, a 1-to-1 risk to reward ratio, not something that I'm really interested in trading because of that. Okay. So this one doesn't even make it to the 50. And it just keeps going down. All right, so let's go to the next day. All right, so now I want you to look at what's happening here. Okay, this is Thursday now. We've basically gone down pretty much. Take a look at the week so far. Monday, Tuesday, Wednesday. We've had basically a directional bias for 3 days. Right, so start thinking about this. If this right here is your M, you have 1 here, you have 2 here, you have 3 here, moves down, this would be your W. So you have your M, you have your level 1, comes down, level 2, comes down, level 3 and then pushes one more down, and it looks like you're creating a W here. Now, why do I say that? I say that because price is now basically trading above the 50 EMA. Why would price come back up and now it's trading above the 50 EMA? You see that? This is all about behaviors. All right, so if you can learn the behaviors that market makers do, you'll understand what price action is doing and why it's doing it. All right, so in this case here, in this particular day, all right, if because the EMAs are still pointing down, right, this is a 4-hour chart, this is a 1-hour chart on the 50 EMA, it's still trending below, so it's still telling you sell. Now, here's one thing that you're going to notice. Is this an obvious downtrend to every retail trader? Yes, right? It's an obvious downtrend to every single trader, right? So most retail traders are thinking basically this, right? Which is fine. They're well to think that, right? That's what they teach in all the books. What I'm saying is, whenever the trend is obvious to everyone, start thinking the opposite and start thinking like there may be a quick reversal. So meaning like, take a look at this. When the trend was obvious to everyone, what happened? They pulled back and did a pullback, right? Same thing here. Look how separated these EMAs are. It's a pretty good trend, right? Now, when you look at it from the sense of the weekly cycle, whether it's the one of the 3 cycles that we talk about, again, all the videos for the weekly cycles are in the playlist. But if we take a look, we've had Tuesday directional move in one direction, and then Wednesday we kind of hit a low of the week here, and then now we're coming back up and trading above the 50. If we weren't trading above the 50, I wouldn't be even mentioning this. I'd just keep on going. But the fact that we're trading above the 50 is now the behavior that I'm talking about. Okay, so what is the ideal setup, essentially, that I would be looking for out of this? Well, if it's going to be a sell, okay, if it's going to be a sell, I would like it to be a type 1 sell. Why? Because I don't want this to be a type 2 because of the tight range that Asia is in right now. So it's only a 17 pip range. So if it's going to be a sell, I would like it to come out and show me that. If it doesn't show me that, then it's probably going to show me something of it moving to go higher and tag possibly the 200 here, and then possibly go down, keep going down. I don't know. We'll have to see and find out. But for me right now, the only thing that I would want to do is, if I'm going to sell, I would want a type 1. Okay, if it doesn't give me a type 1 to sell, then I want to look for any type of bounce, possibly off the 50 here, because this 50 is riding right the middle of the range. So we're going to have to see what happens here. All right, so do you see that behavior there? Why do you think that would happen? That spike. Why would it spike all the way down and then come right back up? Right? It's all about behaviors. So I would automatically start thinking right now possibly a type 3 to go up because of that. Boom. There's your candle right there. That candle is 16 pips body to body. Okay? That right there is your shift candle. that right there is a candle that basically allows price to now go in one direction. Now, it's probably not going to be the best setup because of the risk reward ratio is just not there. Right? The risk reward ratio is way too big. It's 21 pips of risk reward ratio. For me to get into this trade, I'd want the candle to retrace at least half. So now my stop loss is only 13 pips instead of 21. And so if it doesn't do that, if it doesn't come back, then I'm not interested in getting into this trade. And if it goes up, I mean, it is what it is. It goes up. But it's not something that I'm willing to take. Yeah. See, so it's not something that I'm willing to take. There's another bounce off the 50 right there. But again, it's just not worth it. Yeah. It's just not worth it to me. This one, what did it end up going up to? About 28 pips or so. And it did it back and forth, back and forth, back and forth. So it wasn't really the ideal setup. You know? So not something that that I would trade. Again, you're too close to the 50 here to try to make any move during the US session. So it's just not something that's worth trading. And you can see it did nothing but move sideways. So now it puts you into a particular situation though, because you see it keeps bouncing off the 50. So what did that tell you here? Let's go to the Asian range. So now look what's happening. Look what's happening. Do you see what's happening? You see how price got pushed up now? Now what are you looking for? What is your bias now? Think about it. What's your bias now? Because now you're not in a strong downtrend. You're not trading where the 800 and the 200 is above you anymore, right? Now you have the 200 now is below you. So you can see that there's a transition happening from going down to now going up, right? So the setups that ideally that I would like to see is, again, I would like to see a bounce off either the 50 or the 200 EMA. So I would actually be looking for buys, and I would want either a buy, like a type 2 buy or a type 1 buy that bounces off of the 200 or the 50, one of the two EMAs. Okay, so here potentially this could be your first leg. Now you just need ideally a second leg, because this is not, this little pattern here I don't think would be enough for a second leg. So if you don't get a second leg, it's not something that's tradable for me, right? Now there is something though that you should notice, that because this doesn't fit my criteria to actually take a trade, okay, I just don't take a trade during London. Now you have to look at where are you at the beginning of the US session. You're basically not at the low of the day, obviously. You're pretty close to the high of the day, actually, because the high of the day is up here. So you're about 10 pips from the high of the day. So you're not really in the middle either. So not a good scenario essentially for a continuation trade. Although that behavior right there, if you see, could be a good one that could lead up to a continuation trade. The problem is though that it's 12 pip candle. So 12 pip candle, how far are you away from the 800 here? It's about 30 pips. So looking at something like this, is this a 2-to-1? It is a 2-to-1. Okay, so that would be a trade set up there, a continuation trade to get up to the 800 EMA. So 14 pips stop loss, and your target is 800 EMA. Because remember, you're having a transition, right? So your bias is now to be a buy. So you don't quite make it to the 800. I mean, you're making like 27, really 25 pips or so with the spread. But your directional bias was correct. You get what I'm saying? So that's a whole week. Yeah, that was a whole week right there of picking a directional bias. Okay, so that's how I look at the entire week. That's how I would do the entire week. Not every day becomes a trade setup. You have to think about what's the risk to reward ratios. Does it meet what you're looking for risk to reward ratios? And not be afraid to not take a trade. It's okay not to take a trade if it doesn't meet your requirements. All right, stop thinking about you're missing out on something when in reality there's going to be trading every day almost. You know what I mean? So if the setup doesn't appear, just wait for the next day. You want the right setups to appear over and over and over again. That's what you're going to be able to trade. All right, but if the setups are not there, and don't trade them. All right, but I hope this hopefully helped you with directional bias as far as how I see it. Of course, like I said before, there's so many different ways to look at directional bias. This is just the way that I see it personally. All right, I hope this video helped you guys. If you like this kind of content, guys, give me a like, share the video, guys, and let me know in the comments. All right, thank you so much, guys, and have a great rest of your week. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN MasterClass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data, not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.